take on what you made and what are the key highlights for you as far as this budget's concerned?
I think this is a very different budget to what we've seen in the last 5 years. I think this is a decisive change in direction from NDA. This is the first budget in 5 budgets. The capex growth is as little as 10%. Historically, last 5 budgets has been 30%, so big pullback in capex growth. And correspondingly, this is the first time in 5 years that the RevEx growth, revenue expenditure growth, which finances subsidies, that's growing in double digits after 5 budgets. So decisive change in direction away from capex towards revenue expenditure. Obviously, as has been extensively commented, epic tax break for the middle class, something like say 80,000-90,000 rupees in the pockets of middle class people will go a long way towards reviving consumption, which has been flagging in our country. And what was also interesting, leaving aside these sort of headline changes, what was also interesting was the emphasis on pro-poor, pro-SME. This is very similar to what the NDA had done in its first term, which I thought was the most constructive 5 years of NDA. NDA first term was doing terrific work. I think this looks like a return to NDA 1 rather than NDA 2, which I thought was a very different government. NDA 3, I think, has taken the message from the 2024 elections, which is look after the poor, look after the middle class. That's where the vote banks are.
Okay. Mr. Agarwal, I'll come to you, from the consumption side of things, big boost for consumption, no taxes up to 12 lakh rupees, and this is for the new tax regime, of course. And we're seeing, the consumption space picking up in the markets as well. How do you read that, and what do you make of this?
I think, the announcement in regard to the no income tax till 12 lakh rupees, I think this is a big step from the government perspective and a very welcome move. From the industry perspective, specifically even from the FICCI, we have recommended the government an area, this is an area where and how, the consumption can improve. And ultimately, more money in the hand of the consumers is certainly going to help in more discretionary spend and more consumption and better GDP growth rate. So yes, we really welcome this move.
I mean, on the capital expenditure front, the government has maintained that they're looking to spend as much as 11.2 lakh crores in FY26. What does this number mean for not just your sector particularly, but, capital expenditure in general as a whole? Anand, this question was for you.
All right. No, I think this year it was at about 10.8 lakh crores. So from that perspective, there has been an increase. Certainly, we had hoped for a slightly higher increase in capital investment because of the multiplier effect that comes in. But on the other hand, I think the focus on manufacturing and number of areas that the government has focused on to promote manufacturing has been very positive, all the way from consumption towards the national manufacturing policy, promotion of exports through manufacturing, focus on future sectors such as nuclear energy, clean tech, electronics, EV batteries, all of that. I think those are areas which are seeing S-curves, and the government has chosen to bet in these areas for India to be self-reliant. So I think those are the very big positives that we are seeing. On the other hand,
right. There's a lot of things announced with respect to the aquaculture segment as well. There's government efforts to streamline the shrimp exports. There's custom duties which are being reduced. There's financial support to fisheries as well from the NABARD. There's policy incentives with respect to, duty cuts with a lot of products like frozen fish paste, etc. Saurabh, I'll come to you on this one. Which of these stocks tend to benefit from this? Which of these companies in the listed space are benefiting the most from all of these initiatives taken?
I think this sort of micro tinkering, I wouldn't lose too much sleep about that. That sort of micro tinkering is in a way the legacy of our socialist era, where the government messes around with sort of small rule changes. At least I, as an investor, I'm not going to lose too much sleep about that because it's simply futile. There's so much else happening in the world's 5th largest free market economy. For us to sit here on budget day and invest on the back of micro tinkering by the government, I think is doesn't make any sense. Focus on the big picture. The big picture is a decisive change in direction from the NDA, away from an emphasis on capex towards a focus on pro-SME, pro-poor, and consumption. I would say focus on that. If you want to invest on the back of the budget, focus on the big structural themes in the budget rather than the nitty-gritty of about shrimp farmer ke liye kya kiya and shipbuilding ke liye kya kiya and all of that. That doesn't work. It's too big an economy for us to drive
Sure,
investment.
Saurabh, point taken. I wanted a better understanding. So a lower fiscal deficit. At the moment, the capex number at what we are seeing right now, and of course, we've seen some sort of tax relief for the population at large. How is the government managing to balance this? How is it that they're going to, come through and execute on all these fronts?
Absolutely. I think the fiscal maths is actually, it adds up. I was doing the fiscal maths over the last couple of hours. The fiscal maths adds up. They're basically budgeting for around 13-14% growth in receipts, which I think should be doable. And they're budgeting for around 10% growth in expenditure. Thus, the deficit gets pulled back to 4.4%. That should give the government a little bit of wriggle room to nudge the RBI towards rate cuts. The country needs rate cuts, even though the rupee is under pressure. The borrowing ecosystem, both SMEs and the middle class need rate cuts. So the fiscal space, the budget creates fiscal space on the back of pretty solid mathematics to nudge the RBI towards the direction of rate cuts. But what's very interesting is the massive dividend from the RBI. The small print suggests, I think it's a 2.4 lakh crore dividend from the RBI. And then again, I find it very interesting. In spite of this windfall from the RBI, the government has chosen to pull back capex quite significantly, pull back capex growth rather quite significantly. So maths adds up, room for rate cuts from the RBI, and hopefully in the next couple of months, the RBI gets the rate cutting cycle underway. It's, I think, desperately required.
And Harsh, your opinion on this? So while we are looking at slacking growth, inflation really hasn't helped at the moment, especially when it comes to food inflation. What's the way forward? And while we're all hoping for a rate cut, do you think that's a possibility, at least in the near term?
I think from the industry perspective, it has been a ask and expectation that the rate cut should happen. And honestly, if you ask me, I feel very positive about it, that in the coming monetary policy announcement, we should see some kind of rate cut.
Agarwal, one more question from the consumption side of things. Now that there's more money in the hands of people, we're seeing an urban consumption slow down overall. Do you expect that the urban consumption going forward will pick up? And if yes, will the gap between the value versus volume growth widen?
See, yes, I think the whole idea of the government also to tinker with the tax rate is to boost the consumption. And in my mind, yes, there is no doubt that it will help the consumption. But yes, to what extent, we need to wait and see. Apart from that, there are many other initiatives, which the government has taken, where they want to focus on Make in India, the focus on the employment or the labor-intensive industries, which will again, give boost to the employment. So overall, I think it's a good budget from the consumption perspective.
Come in on this. Look, I understand that the union budget is, it's not responsible to spur manufacturing activity in India. All it can do is making perhaps, 8 things going forward. Still, from the government perspective, what more can you expect going forward? Where are things standing at this moment? And do you think that we could expect more changes? Are you okay in terms of the announcements that we made in the union budget so far when it comes to manufacturing in general?
So is this for me?
Anand, this one was for you.
So I'd say that I think now the government has to act on what they have said, and as well as share the fine print details. So they have shared that they are creating a high-level committee on deregulation. That is a very positive step. If you look at the language used by FM today, a lot of language on simplification, trust, and if these things all land up in terms of real action, private-public partnerships, working with states and incentivizing states for reform. So very important directional comments made. I think we have to now see that coming into action. Even in the common man, if you look, indirect tax simplification, direct tax simplification of slabs. So a lot of talk on all of this, and that's a very positive direction and roadmap that we are looking at. And if that happens, I think it will be great for ease of doing business in the country.
Okay, with that, we are also joined by Ameera Shah, who's the promoter and executive chairperson of Metropolis, who's joining us now. And Anant, thank you so much for giving us those insights on NDTV Profit. Always pleasure having you. Ameera, welcome to the show. My first question to you is a lot of reforms with respect to the pharma sector overall. How are you reading the budget and what do you make out of this, and how does it benefit the overall sector?
Actually, it's quite thrilling because I would say this is one of the most visible, budgets for healthcare importance in the last many years. And we've seen a bunch of reforms come out from the FM this morning, including sort of, investing in 200 cancer care centers in all the district hospitals all across the country, and recognizing that cancer is going to be one of the fastest growing diseases in the next 10 years, that this is going to be a requirement, for patients. They've also said that they're going to be removing or subsidizing the cess on all kinds of life-saving drugs, medical equipment, cancer, care, and chronic disease care or chronic illnesses care. And I think that's again going to be quite exciting because it basically facilitates a more affordable and a more comprehensive health environment for our consumers and our patients in India. Along with this, the government has also recognized that AI is going to be a significant push in the future and is investing enough money to create an AI development center really focused on education and healthcare, to really look at analytics, to really look at data that will really support India moving forward. A lot of the data we have in the country is usually global, and having that kind of Indian data would be phenomenal to make things more efficient and easier for patients again. Medical tourism is another area. Our Indian hospitals have been saying for many years we are, very good at what we do, and Heal in India and medical tourism is going to be enabled even more by the government, going forward. So lots of exciting healthcare, introductions, besides obviously the more general economic reforms, which I think are also quite interesting from what they're doing with the tax.
Ameera, just, is there anything that you think that you were expecting it that didn't come through in the fine print at the moment, and that you were waiting for the government perhaps to take more measures in those areas, perhaps pertaining to the sector in which you operate?
One thing for sure, actually, GST has been a bit of an issue for the healthcare sector now since GST was introduced into India, where we get all the input costs and all the input taxes, but we don't get any offset because we are exempt from GST. And this lands up actually making healthcare much more non-affordable for patients and more costly. And we have been urging the government for many years to say, please put us in a zero tax bracket or a 5% tax bracket for GST, because that allows us to offset the costs. But that's something that we do miss as a healthcare industry, that has not been addressed yet. And we certainly do hope that the finance ministry will take cognizance of this, because this is something that will work towards the government's agenda of making healthcare more affordable for all Indians.
Okay, Ameera, as well as Saurabh, we'll leave it at that. Thank you so much for joining us and giving us your quick take on what the union budget has brought in. But